My name is Grant Haywood, and I chose Caterpillar Inc. for my stock that I'm evaluating. Their stock symbol is CAT. They have a 2-star rating, which means they're pretty high risk. And yeah, they specialize in heavy construction and farming machinery, mining equipment like diesel and natural gas engines. And as you can see, their stock price is going down currently. And my stance on this stock is I think that you shouldn't strongly sell it, but just sell it in general. Just sell. Be cautious about this one. I think you should sell this one if you have it. Um, and I'm gonna look at why I think that here. So um, you can see they're a pretty established company. In the analysis, they talk about how they're one of the world's leading construction and farming equipment companies, and if it would load, the Bear talks about a lot about how other other construction companies are going to be doing things better than Caterpillar is currently doing them, um, and just becoming more aggressive, and their stock's going to be falling. And you can see if I could open this graph, their performance, they are actually overvalued their stock right now. They're overvalued by almost $50, and that's you don't want to see that. I mean, if we look here, it looks like their return percentage is good, but compared to um, compared to the others, their prices are just higher, and um, this one actually says undervalued, and these are fairly valued. So if you were to invest in a machinery stock like Caterpillar, I would suggest one of these instead of Caterpillar, just because of that overvalued, and they're you can see here they're negative in their revenue growth. Not as negative as Deere. They're not actually that bad in revenue growth, but you still don't want to see that like 16% revenue growth for Mastercard. I mean, that's pretty good. Uh, yeah, so here we get to the ESG risk rating, which is like relates to like government issues and the actual news climate, like what's politically happening. And you can see that it says medium, but it's almost to high, so that's not good. And it has a moderate controversy level due to its employees and operations. The CEOs here we can see are getting paid a lot more than their employees, like a huge amount. I mean, it's normal for a CEO to get paid more than his employees, but compared to their average salary of the employees, it's a lot more. Let's go back here. You can see that it says that it's like almost a moderate risk, but if if it's your money on the line, you don't want it to be even a chance that there's going to be a risk on what you're putting your money into. So that's why I'm saying that you should probably sell this stock. I mean, if you really have a lot of faith in Caterpillar, you can go for it. But you can see here They've been they had a couple good years here, and they've been going down since last year, and they had a terrible year in 2020. I think every company did though, but yeah, they're operating and like everything's going down. Their revenue going down, operating income, net income, EPS going down crazy amounts. You can see their profitability here, so it's pretty good for on equity, but that's not what the overall is not profitable. Um, Financial health, yeah. Cash flow. I don't have any data for this year yet here, but we can see last year's negative. Um, if we go to 10 years, it's negative here, negative there, 2015. Yeah, they're pretty moderate company to be honest. They don't. I mean, yeah, yeah. But there's just other companies that are going to be doing it better than Caterpillar. They've been around since for a long time. You can see, and um, they're just not as competitive anymore because I guess new technology is coming out. That's what I read by George Maglaris. He writes a lot about this in this analysis area. Yeah, not crazy high gross profits for as large as a company they are. Just not want to see that. And yeah, like their earnings. They basically are saying that their net income is falling, fell by 2 billion, 2.6 billion. It's like because of their operating profit, they're um, they're decreasing. Their earnings per share decreased to 462 from 548 because they're lower net income. And yeah, so gosh, what that is. Um, all yeah. Here we got another graph of their performance valuation. Yeah, so pretty much what I've been saying. It's just getting lower, but they did. They're not awful. They're not like you don't want to instant sell, but it's definitely something you need to be cautious of. You need to sell. I would sell this stock. Um, Dividends. I saw they had like 468 million shares outstanding. Yeah. Other companies like this one, they all have much better ratings than the 2 stars. You don't want a low rating here, and so just go with one of those compared to Caterpillar. Yeah. John E. Creed, he's the director. He's getting paid 1.1 million. Um, been here for just a year, not even a year, 6 months, and as the financial officer, Andrew Robert John Bonfield, 7 years. It's just been key. I mean, the executives are getting more money each year, which I wonder if you can really tell But yeah, here's their stock price for 1 year, and you can see it's going up, but it's just inflation, I think, and I just think you'd be better off, even though that this stock is not. You'd be better off investing in something else. I don't think you should invest in this. You should definitely sell this if you have any of this stock. But yeah, since 1972, been around making construction equipment, and I hope I could convince you guys to sell this stock if you have any of it. And thanks for watching.